When the stock market starts looking like this, it's probably a good idea to have some cash in your portfolio to take advantage of these opportunities. However, there are other reasons why cash is important to have, so let's get into those. Now, in the past 5 days, the S&P 500 is down about 3.65%, which is about $250. That means that most of the stocks, or at least the biggest stocks in the stock markets, have been dropping because they're usually the ones that move the market the most. So if you have cash in your portfolio, you could probably take advantage of some opportunities. Now, currently my portfolio, I know it's nothing too crazy. It's down 1.83% in the past week, which is about $421. But as you can see here in my buying power, I do have some cash. This is only about 6% of my portfolio. I always try to keep between 15 and 20%. So you might be asking yourself, well, you say that, but you only have 5. Yes, because I've been taking advantage of the stock market that's dropping and I've been buying some shares. Now, cash is not only good for opportunities in the stock market, it's also very good for risk management. That means you don't have all your portfolio invested, because right now all of your portfolio will be quote unquote losing money unless you had a pretty good entry. But if you started investing this year, you're more than likely starting to lose money unless you start investing about April 4th, which is the lowest the market has been so far in the year. But if you have some cash, you can see that you can earn interest if you have Robinhood Gold. And I've earned about $8 in interest this month, and the subscription for Robinhood Gold only cost me $5. So I'm making a $3 profit, which I know is not going to make me a millionaire, but it's better than nothing. Now, as you can see, this is a little bit of a breakdown of how my portfolio was. You can see it was 82% invested in stocks and ETFs. I have about 1.3% in cryptocurrency, and then the other one was about 16% in cash, which is about $3,000. And it's showing this because I am selling a put in AT&T, so this is counted as cash. So this is what it actually would be, unless I just count the 1,300 which I have available to use right now. Another reason why it could be important to have some cash in your portfolio is that you could average down on your positions once they drop. For example, I do invest in Vanguard's growth ETF VUG. This is by no means financial advice, this is just what I'm investing in. And as you can see right now, my total return is down about 1.52%, and this ETF is about 22% of my portfolio. I know it's a lot for this ETF, as it is a growth ETF and it moves very drastically in terms when it goes up and the same when it goes down. That's why, as you can see, I'm negative down. But my average cost was about the 480 something, 490 mark, and now it's down to 479 because I'm averaging down my cost because I have that cash to buy some shares. And this also leads to another reason of having cash in your portfolio, of that it helps you with some sort of psychology so that you just completely sell your position. Okay, this helps you have some peace of mind knowing you have more cash. You can buy your stocks or your ETFs at a lower price to average your cost to then have more money in the future. Another reason why it's great to have cash in your portfolio is helps to rebalance. For example, on this ETF, 52% is based in technology, so this is a very high percentage. Now, what does this mean? My other stocks in my portfolio that I have sort of like defensive or energy stocks, I can go ahead and put some money there, allocate some money there, and balance my portfolio a little bit while also buying some more of this to average down my cost. Again, this is all possible if you have cash in your portfolio. And also with cash, you got to be careful not to go too crazy, because yes, so S&P 500 is down 3% in the 5 days, but year to date it's still up 12.76%. So you have to be very careful not to go crazy with it and spend it the same day that the market goes down by 1%, because you don't know if it's going to end up going down by 20% or just that 1%. So I think, in my personal opinion, you have to splurge a little bit, but you still have to have some cash in hand. And as you can see here, I'm also taking advantage of selling puts. On the top right, I have a put for AT&T that expires this week. Since the market was going down, the premiums were very decent, so I decided to do this, make some extra cash while also having some more cash in my portfolio. Again, this is getting very repetitive, I know, but I just want you guys to understand the importance of this. And also, don't get cash confused with like a high yield savings account. And when I say cash, I mean you have cash in your account that I could withdraw this right now if I needed it for an emergency, or I could use it to buy stocks right at this moment. And in terms of talking about that, I also have 25 shares, which is about $2,500 of the SGov treasury bond. Now, this is also considered to be cash, but it's not cash right at the moment. I still have to sell this, put it in my portfolio, and then go buy some stocks. So I'm not counting this as actual cash, but this is also another part that I can consider to be cash, because this barely moves. It's just money sitting there earning some interest. It's about 13% of my portfolio. Since I don't think there's that many good opportunities in the market, I just have this for right now earning some interest. And if I do see the market drop another 5-10%, I'm probably going to get out of this position and then deploy this cash in individual stocks or average down my cost in my ETFs. And the last reason why it's probably a good idea to have some cash set aside is that, remember guys, if you're investing, you're probably going to have to pay taxes at the end of the year. Some people spend other money, they don't have any tax to pay for the taxes after they do the taxes. I just repeated tax like 20,000 times, but this is another good reason why you should have cash. It does help to have this in your portfolio. You can always take it out, pay the taxes, and if you're like me, you deposit a little bit every month into your portfolio, so it's still going to grow again. I want you guys to let me know in the comments below what you think is a good percentage of cash to have in your portfolio. Is it 10, 15, 20, whatever it is that you think? I want to know how you guys think about investing. I think everybody's going to have a different answer, so I'm eager to know. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you in the next video.